Welcome to the Real Estate PB&J Hour on Money Talk 1310 and 100.9 FM. Rose and Womble Realtor Paul Fuqua is here to share market facts, the fundamentals of selling, buying, owning, and improving your home, plus interesting experts. Now, here is Paul.
Well, I hope you're enjoying your day despite the dismal weather. I was out in it earlier, coming to the station, and found that I was becoming more and more distressed. It's almost as though it should be nap time in the late afternoon on days like this. You got to get under the covers, turn on a good TV show, and snuggle up with the dog and wait for other people to do their thing. You're on 1310 AM. This is the Real Estate PB&J Hour. I am Paul Fuqua. I'm a veteran professional realtor, and I've sold millions and millions of dollars worth of houses in this area over the years, and I enjoy bringing to the airwaves some of the I don't want to say professional, but some of the experiences and some of the knowledge that I carry, for fear that it'll be lost once I croak and I'm 6 feet under. In the meantime, I'm normally co-hosted on this show by Joyce Carcase, who is under the weather today. She's not feeling well. So I've asked our guest from last week, managing broker of the Greenbrier office of Rose and Womble, Kim Pimento, to join me in the show. And Kim, welcome. I'm glad to see you here. You're even more enchanting a guest host as I am.
Thank you very much.
You're
I'm
welcome.
glad to be back.
I'm glad you're back. And really, the way we structure this show is we like to touch initially when you first come on the air, or when we first come on the air, with an update on the state of the market, how many houses are on there, what the average price is, what the median price is. It can be stimulating thinking for those of you who are mathematically inclined. Personally, I'm a little blasé about it, but that's what Kim's job is today. So I'm going to turn the mic over to you, Kim.
All right. Well, thanks, Paul.
You're welcome.
All right. Well, you know what? Something good happened in May. We set another record showing of the median sales price, or what happened in April, I'm sorry. So it looks like, and the median sales price in April was 300, so was, hold on one second, was up over a year. So I'm just going to go by years. I think this a little bit shows it a little bit better, where people can kind of get a grasp on how we've gone. So 2020, our median sales price was $255K. In 2021, it was $300K, and this year it's $319,900. Which that really shows you how we've gone up in median sales prices over the last 3 years.
Remember, median, middle. Just like the highway, median, middle. And it's MEDIAN, median. I used to call it median, but what did I know? It's median. Half of above, half below. That's important. It's not the average.
Yeah, that's right. That's real important. It's median, but it does say that that does indicate that our prices are rising in the lower levels a little bit and coming up to that
right.
median market, which I think is a good indication. I feel like we were a little behind, and we have caught up, but right now I think we're fixing to stabilize. According to Liz Moore of the Hampton Roads, she said that the rising mortgage rates are beginning to impact demand both locally and across the nation.
Do you think that's going to, the question I'm always asked, and we've talked about this before, is that going to be indicated, or be an indicator that we're going to see a fall off in value over the coming months, or is it going to be just slowing down the increase in value that people are seeing in their homes?
Now, this is just my personal opinion. I feel it's just going to slow down and stabilize the prices. Because if you look at what I usually call the absorption rate, or the month supply of inventory, we're still pretty low. In April, it was 1.01. That means we have 1 month of supply, just a little, maybe 1 month and a couple of days.
Right.
Now, in March, it was 0.88, but I think people are starting to see that they need to put their houses on the market while these rates are still a little bit affordable, because I think people are afraid of a huge fall off. And so that, but in April of last year, the month supply of inventory, or the absorption rate, was 1.27. So see, we're still not really back up on target as far as having a lot of inventory to sell, which is going to keep our prices up.
Do we have any indication, Kim, that that's national, that kind of shortage or that kind of absorption rate is this? I have to assume it's similar in other areas of the country, because this is not a local phenomenon in terms of the amount of inventory for people to look at and buy?
I don't know the answer to that question, and I am assuming, as you do, that the bigger markets. I know Austin is. I know where my parents live in Harker Heights, Texas. It's the same. I know in San Antonio. I know parts of North Carolina. Mm-hmm. So I think that the higher markets that everybody's moving to, I think they're like that. So I think we're still going to see our prices stay high but stabilize a little bit. And then the next thing that I wanted to talk about is just the inventory. And the way I'm going to say it here, I think really helps show us how vast our inventory has gone down. In 2019, there was 8,974 listings.
That's 8,974 houses on the market active. Here
in Hampton Roads,
right,
with our REIN MLS. In 2020, there was 6,695, which that's still 2,000. That's still a pretty big decrease. In 2021, we had 3,780. And then this year we have 3,187.
So the price increases that we've seen are in large part due to the demand. Houses are coming on, boom, they're gone.
Right.
Now, I showed a house today to a couple and their 2 children from Raleigh, Durham. They were actually looking for a summer place. And they live in a house that they bought a number of years ago and are absolutely flabbergasted by the amount of appreciation their house has gone through. They live in a nice area of the Raleigh-Durham complex. But they were pleased to see that what's here is less expensive than there.
Right, yeah. I always love it when people come in from that area. Yeah. From New Yorkers,
Yeah, exactly.
They love our prices.
And they bring cash. That's even better. You sellers out there, cash is king, believe me. Okay, what else?
Well, another really shock, this stat doesn't shock me as much. For April, our number of settled sales was down 11.9% compared to this year. It was 2,814 houses closed in April, and then last April, 3,194. But if our inventory continues to decrease like we saw, that kind of makes sense to me. Mm-hmm. Less inventory, less sales. So that's not too shocking to me. The inventory going 5,000 less since 2019 is a big shock to me. The fact that that's almost 60% less than the houses that we used to have to choose from.
Right. Now, my understanding, though, is do your statistics show that we've actually had an increase in April of residential listings? Is that what the statistics say?
Yeah, we had it. Well, no, pending residential sales for April were 3,100.
Okay.
But compared to last April was 3,600. So that's pending. And new residential listings for April of this year were 4,056. That's up 3.8 over last month.
Okay.
So we're seeing more come on the market, but again, I think it's because people are getting afraid of the interest rates, thinking I better sell now or we're going to go into a bust.
Well, we had a lender on here, a prognosticator. I don't want to say a lender, but an economic prognosticator who stated that one of the major problems that we have throughout the country is lack of new construction. In large part because of the supply chain issues, in large part because of some inflationary pressures. I know that I had a project with which I was involved. There were 3 houses in Virginia Beach, and from the time we broke ground until we started framing, the lumber package for each house had gone up by $20,000. That's each house. And these houses were priced and under contract at the pricing that was in place 6 months before. And
Correct.
So builders are reluctant to start construction and take contracts unless they have escalator clauses in the contracts. And how do you justify that to a buyer who may well be in a tight situation with regard to what he qualifies for?
Well, it's hard to justify, and they get angry and don't understand it at times, which I kind of understand that. How can you sell me a house and not tell me what it's going to be, final purchase price is going to be? That's kind of hard to swallow. I don't know if they build in a percentage in there. I haven't really seen that yet in a contract, but I'm assuming that maybe there's a percentage that caps it with some of the builders. I'm not quite sure.
I don't know. In all my years, I've never written in, and I've represented a number of builders. I've never written in an escalator clause on a contract, other than in the options, the upgrades.
Correct.
And upgrades, sometimes they can be priced very effectively for the buyer, or other times they're priced very effectively for the seller, the builder. And I saw levels of carpet go up by double, and I saw countertops change from one class to another, and they tripled. And I found it. I never pursued the actual numbers, but because I was representing the builders, and what they had to do, they did. Now, tell me something about what. This is a reminder, folks. This is the Real Estate PB&J Hour. We're on 1310 AM and 100.9 FM. And if you're now parking and about to turn off the car, go rush to your computer and turn it on and tune in to moneytalk1310.com. You can hear us live there. And even more, at the Real Estate PB&J Hour on YouTube, you'll be able to hear this and replay it to your heart's content. We've got 18. This is the 18th show, so we've got 17 shows in the can. And if you want to put yourself to sleep, then you can turn us on or turn me on, and you'll just, honest to God, you'll nod off very quickly. Okay, we're back. Enough of the plug about where we are and what we're doing. What about pricing on the market and changes in pricing?
Well, that's something that we have seen more. We're seeing prices being dropped, and in fact, it's kind of at an all-time 6 months high. The amount of listings that have been dropped for the 4 weeks ending May 1st, 15% of home sellers dropped their asking prices, up from 9% a year earlier.
Right.
So that's pretty significant there. We're also seeing more people offer some closing costs. That's a few things that some of the agents in our office have done. If the house is kind of sitting on the market, drop it just a little bit, but offer some closing costs, because I still think there's people out here there that don't have the cash to compete in this market. Right. So if you're having a house that kind of sits there, lowering the price a bit and offering some closing costs might be the trick of getting some people in there, and they feel like they can have a chance at getting a home.
Well, you're in contact with a large number of agents that work for you at Rose and Womble. Do they relay back to you the sensations and the experience they've had in dealing with a buyer in this market? There's an emotional aspect to buying. I've always said it. You make your decision emotionally, tempered by the thickness of your wallet. Right. So when you start bringing in the aspect of finances, that emotional decision becomes a little more difficult to carry through with. What are you hearing?
I'm hearing the agents say that their buyers get frustrated. They feel cheated sometimes when they don't. They feel like they really put in a great offer, and a lot of them do, and they don't get the offer. That's hard when they feel like they've really set their whole life and a lot of guaranteed money on the table and didn't get it. And I think that's hard. And then the people out there who just don't really have the ability to compete. And it's hard as an agent because they keep saying, well, maybe next time. And it's really hard on agents because sometimes it's kind of a conflict of, do we just keep writing these offers knowing that we're competing against homes that are going to beat us out? It's a really tricky thing as an agent to be professional, and like your clients and tell them, hey, it might not be the time to buy, or we have to get in the game a little bit more.
What I've seen is the plaint by buyers that they don't want to buy a house that is overpriced, but my response has always been that the price you pay now, you're going to forget it's what it was after 7 years being in the house. I mean, right. This is, if you pay $10,000 more and that it may well have been worth a year ago, that $10,000, when you divide it by 30 years, it becomes relatively inconsequential. Now, I know every dime helps, on a monthly basis, but if you can afford the house you want at what you may consider to be an overpriced level, but you can still afford it, that's a decision that you have to make, and you have to follow many times your heart.
Right.
Is this the right place for me and my family?
And sometimes it's quality of life.
Yes.
Decision. How do you want to live? But the other thing is, real estate really is a kind of a long-term investment. Very few speculative markets come in. Like right now, we were probably in a pretty good speculative market for investors, but it's a long-term investment. So I don't think you can go bad on investing in real estate. But I know that some people, it's hard to hang on. They don't want to be, they don't want to be landlords maybe. So, but you have to think of real estate as long-term, and you need to stay there 5 years. Especially buying in this market, or maybe longer.
All right, we've been on the air a little bit. We're going to take a short break. This is Paul Fuqua and Kim Pimento, my co-host, on the Real Estate PB&J Hour, 1310 AM, 100.9 FM, and MelonyTalk1310.com. See you in a few minutes.
Now back to the Real Estate PB&J Hour on Money Talk 1310 and 100.9 FM. Rose and Womble Realtor Paul Fuqua gives you the fundamentals of real estate selling, buying, owning, and improving your home.
Okay, we're back. This is Paul Fuqua, Rose and Womble. I'm a real estate agent. I'm here in the Real Estate PB&J Hour, and I have as a co-host Kim Pimento, who discussed a myriad of statistics and facts about the market. Kim, you had another thing you wanted to add?
Yeah, and one more thing before we bring on our special guest star today is our month. If this is just kind of a really good analogy or kind of an example, that housing affordability is declining as the monthly mortgage payments have increased nearly 10%, while the median family income increased just 1.1% in comparison. So according to the NAR, the National Associated of Realtors, Housing Affordability Index reflecting March data, so that's where we got that information. For example, a $1,000 monthly mortgage last March was what it would have been $1,000 last month. This March would have been $1,500. There you go.
That's substantial, folks.
That's $500. That's very substantial.
Okay, now we have a special guest from Towne Bank Mortgage. This young man is a local native of the area. He went to Great Bridge High School. He was a pitcher for Great Bridge, and he pitched well. Played college ball, and he's come back to become one of the bad guys in the lending industry. He is a collateral underwriter for Towne Bank Mortgage, and his name is Taylor Reeves. Taylor, welcome to the show.
Thanks for having me.
Yeah, well, we were able to talk baseball a little bit before you came on the air, but you're here and because you're one of the guys in the back room in a lender's office that reviews all the stuff that the loan officer gathers up from his or her client, correct?
That's right.
And you're the guy that comes out with all the bad news that the loan officer then has to make the phone call. Is that correct?
For the most part. Most of the time it's good news. Sometimes it is the bad news, unfortunately.
Well, I just went through an experience where the underwriters with a national credit union created a significant amount of difficulty, and I've never had that kind of problems with Towne Bank Mortgage. So you that's a kudo.
That's right. That's right. Towne Bank is the place to go.
Okay. That's enough of commercial for Towne Bank right now. However, all right, Taylor,
yes,
as a collateral underwriter, tell me what you actually have to do. This is a scenario. I'm buying a $400,000 house. It's a single family. It's in a Great Bridge neighborhood. It's in pretty good repair, but because of the competition for the house, I have waived the property inspection contingency, and there is a homeowners association. That's the only contingency remains. Now, what do you look for as that package hits your desk?
So part of the collateral side is we only do the property side. So, we are looking at the appraisal. We're looking at the insurance, the HOA's insurance. Sometimes we have to look at their financials and just kind of make sure we're putting the borrower into a good place, as well as meeting the agency guidelines.
Well, how extensive have been the changes in agency guidelines since you've been in this business? And how long have you been in the business?
I've been in for 7 years now.
Okay.
It is changing nonstop. I would say every 6 months to a year, there's always a little tweak here and there. And most of the time, unfortunately, it feels like all they do is add to us. But it is forever changing.
All right. Now, when you look at the house, are you looking at the house in order to substantiate its value, or are you looking at the house as a part of the package that is played or created by the buyer's income, the amount of equity he's coming to the party with, and then the house, or you're not involved? You're just looking at the house and the hard.
Oh yeah. So on the collateral side, we don't have anything to do with the credit side.
Right.
The only thing we are looking at is that property, and the appraisal is a big part of that collateral side. So we have to make sure when we're looking at that appraisal that the value that the appraiser has come up with is justified.
Okay.
And it has got to match with the sales price and all of that.
All right, I've got a question for you, because I've seen recently, I had a couple of transactions where the buyer did not have an appraisal. Now, what's the threshold? How much money? I know how much money these people put down on these deals, but from your standpoint, what is that dollar amount or percentage that they can waive an appraisal?
That all depends. That all depends on your credit worthiness, how much money you put down, and the program that you go with.
Okay, then let me structure it a little differently.
Okay.
We got a conventional loan. We're putting 60% down. It's $400,000 buy, so we're putting $240,000 down. Right? We're a 30-year loan, not 20.
Okay.
There is no HOA. It has been inspected, and the inspection has shown that it does not need any significant repair whatsoever. All right, now, is that going to work? Can I waive the appraisal?
You definitely have a very good chance at waiving that appraisal.
Who makes that decision?
Ooh, that would be
Is that another bad guy behind the green door?
Yes, and I'm gonna point the finger at the big agencies, Fannie Mae and Freddie Mac.
Right.
So that's the bad guy in that situation.
Okay.
Or the good.
Now, let's say you've got this situation. It's on your desk. Do you pick up the phone and call Freddie Mac or Fannie Mae or Ginnie Mae or whoever?
No. So my friends on the credit side will.
They take care of
that stuff through their system, and all I do is look at the report.
Right. Okay. Now, let's say on this house, I'm not putting 60% down. I'm putting 30% down, and I'm not waiving the appraisal. When the appraisal comes across your desk, what are the first things you look for?
The first thing we look at, and the biggest thing with the appraisals, is definitely the comps, the comparables. So we want to make sure that, once again, that the value is justified, and that there's no major repairs that need to be made or anything like that.
Okay. Now, how long does this process?
Ooh,
am I putting you on the thing?
No, it's definitely not. It's definitely not as long and as rigorous as the credit side of it is.
Right.
That it shouldn't take more than a week.
Okay.
If it's cookie cutter, of course, it's always changing.
Right. So let's go back. Here's the scenario. We're putting 30% down. It's $400,000 buy, so we're putting $120,000 down. We have an appraisal, and it appraised at $396,000. So it's $4,000 short, 1%. Will you still place that loan, or do we have to go back and?
Oh, yes.
What?
We can definitely work that.
You can work that.
Oh, yeah.
What's the threshold where you can't work it? You don't have one. No. You can tell us, remember, people are listening. You're the expert here.
Stuff here. I don't want to give away too much of the tricks and tradecraft,
That's why these are always the bad guys in my book, because you can't, number one, the agents and the buyers and the sellers, they can't reach out to you, can they?
No, they can't.
And that's under federal law.
That's right. That's correct.
Okay. Well, how do we get to you then?
You're a loan officer.
Oh, yeah.
That was your middleman.
Yeah, I'm going to quick story. A lot of the loan officers, they always just, it's the underwriters. I can't do anything about the underwriter. They got to deal with their set of regulations that are all imposed by the federal government. And then there's this poobah out there in the galaxy that runs all of these reviews, right?
That's right.
He's the guy, whoever that guy is out in the galaxy, in that new black hole they discovered, that's the person that's judging your property. Is that correct?
That's it.
Okay, see, now we have somebody we can really despise. All right. Now, you are one of Towne Bank's experts, if you're not their expert, on condominium valuations, correct?
Sure.
Okay.
Sure.
All right.
Depends on who you ask.
Okay. Well, you wouldn't be here if we didn't know that was the fact. You're one of the condo experts, if not the one, at Towne Bank Mortgage. But for the sake of general education, because I always tend to forget, can you take a brief few moments and describe the differences between fee simple, what it is,
Sure,
cooperatives, and condominiums?
Okay.
You're on the air.
So the big main thing with your property is either one of the two. It's either fee simple or leasehold. Fee simple is where the HOA and the unit owners, they own the land. And a leasehold is when a third party owns that land and you have to pay a lease to use that land. More so.
Okay, you lost me there. Okay, I thought
That was going to be easy.
Yeah, no. Well, let's. I thought we had fee simple, single family residence, single family home is owned fee simple, meaning you own the dirt, you own the air rights above it, you own the mining rights below it. That's fee simple. All right. Then you have a cooperative, whatever it is, cooperative, which a co-op, which is like you're owning shares of stock that's commensurate with how much footage you have.
Right.
Then you got a condominium where you own part of the air rights from the studs in, right? Is that
so? Where you're going with that is kind of like what differentiates a townhouse
right
in a condo.
Okay.
So in that instance, if you own a townhouse, you own and are conveyed the land underneath your unit.
Right.
In a condo, the HOA owns that land and is considered a common element.
Right. Okay.
So you do not own the land that your unit sits on.
But you are part of the ownership of all of the land.
Correct.
Okay.
Correct. Because that's part of your HOA dues.
Right. Or
right.
COA. We call them COAs on my end.
Oh, yeah, they're all COAs,
and
POAs.
They're all the same.
UAs, yeah,
right.
Whatever you want to call it.
All right. You simplified it. So, again, now, what are the problems that we can associate with buying condos today? When you get a contract for a condo, and it's a 2-unit condo with no fees, what do you have to do there? Anything?
Oh, for a 2-unit condo, we love that on my side. All we have to do is make sure that the borrower is sufficiently insured. Okay. So we're really just looking at the insurance and the appraisal on that, and there's no rigorous condo review to do in that instance.
All right. So now, how about a 4-unit condo? They've got those in Shadow Lawn, cluster housing, 4-unit condo. Is that the same?
It is. It is. So the 3. Well, I guess I'll start with the 3 basics.
Okay.
So you have a detached condominium.
Right.
You have a 2 to 4 unit project. They clump those together.
All right.
And then you have the regular attached condominium projects with 100 or 200 units in it.
Okay. Now, I have sold detached condos.
Yes.
In neighborhoods that have common ground. But they've conveyed title to that detached condo, and the responsibility for maintenance of the exterior has fallen on the homeowner.
Correct. That all depends on what kind of master policy is what it's called that the association gets.
Okay. So
a lot of times in those associations, especially with the detached and those 2 to 4 unit projects, the association will only have a policy to cover their common areas.
Okay.
So in that instance, the building coverage exterior and the interior, is the responsibility of the homeowner.
We're bringing this up, folks, because condominiums are a very effective way for developers to build a more dense neighborhood, and they are done so sometimes age restricted. Sometimes they're done with. There aren't any other restrictions that I know of in a condominium. You can do it age restricted, 55 and up, and an active adult.
Pets.
And pets are counted too.
Well, they'll do it pet restrictions.
Oh, pet restrictions. Okay. Now I've lost my train of thought. Those condominiums, when they have those, are they simpler to deal with from your standpoint? Meaning the highly developed cluster properties. I've lost you.
That sure is a loaded question,
Yep.
Paul. I don't think we have enough time for all that, but yes, they are, especially when you get a developer that really knows what they're doing,
Right.
and their attorneys know what they're doing.
Okay.
That definitely makes it a lot easier. But for 7 years I've been in the business now, I'm so used to seeing those large developments. So, people on my side are definitely used to seeing that. And the guidelines, the agency guidelines from Fannie and Freddie, they're definitely more, they really touch on those condos a lot more, so we have a lot more guidance.
Okay. We're talking about the large scale development.
Yes, sir.
Okay. Now, what is there anything that the buyer can do prior to putting his Okay, wait a minute. Let's back up. There is a contingency in every contract when it's a condominium or a homeowners association controlled neighborhood, and that contingency requires that the buyer cannot waive it. 2, the documents have to be provided, and 3, the buyer has to review the documents and acknowledge receipt, and he then has a 3-day right of rescission. Is that correct?
Sure.
Okay.
Yes.
Now, during that time frame, that's a very short period of time, in essence, for an individual who's not skilled in wordsmithing, has not bought and sold condos or developed them, to wade through 98 pages of stuff.
Right.
Where should that buyer and that agent for that buyer, where should he or she concentrate his effort in reviewing the condo docs to make certain that he's protected?
Well, I'll definitely first getting the condo documentation that we're going to need on the lender side. Most of the time, there is a property manager that works for a management company that is pretty much in charge of keeping track and holding on to that condo documentation and pretty much giving us, the lenders, what we need to meet these agency guidelines.
Okay. Now, do you reach out to them or do you expect the agents, the real estate agents, to make certain that those are ordered and provided to you?
So the agents are always a great help. I say when these quote unquote stubborn property managers and stuff like that, that's when the agents come in and they can really get what they want, because they're not going to listen to me. They don't care about me. But the agents, they don't want the agents walking into their office, calling their phone. So the agents are definitely a big help.
Okay. So now, let's go. We've gotten the documents.
Yes.
We've made a copy of the documents available to you, and there's some specific things that have to be the declaration and the bylaw, and there's stuff that you don't need out of that package.
Oh, there's always stuff we don't need.
Okay. But I guess where should the buyer, in your estimation and opinion, where should the buyer concentrate his efforts at reviewing the documents he's been provided? What's going to be the biggest problem for him? Not for you, but for him. You look at these hundreds of these a week, I'm sure.
Right. For the buyer, for the normal everyday buyer, unless it's the bylaws, I wouldn't dig too deep into it.
Okay. How about the financial strength?
I would definitely advise that you definitely look at the financials, especially if you want to know where your money's going.
Okay.
So you pay, these $300, $500, whatever a monthly dues. I would personally want to know where that money's going.
But is that one of the things that you look at as you're reviewing these papers?
Most of the time, for most programs and most projects.
All right, we're here with Taylor Reeves from Towne Bank Mortgage. He's a collateral underwriter. This is Paul Fuqua. You're listening to the Real Estate PB&J Hour on Money Talk 1310 AM, 100.9 FM, and MoneyTalk1310.com. Be back in a minute.
Now back to the Real Estate PB&J Hour on Money Talk 1310 and 100.9 FM. Rose and Womble Realtor Paul Fuqua gives you the fundamentals of real estate selling, buying, owning, and improving your home.
Well, we're back. We're discussing condominiums, cooperatives, and fee simple or single-family homes detached. We have lots of descriptive language with Taylor Reeves from Towne Bank Mortgage. He is a collateral underwriter. His job entails reviewing all the aspects of a property that is involved in a transaction, which is to be funded by Towne Bank Mortgage. Did I restate that correctly?
You did.
Okay.
Yeah, good job.
Now, I'm going to ask you a personal question. You went to Great Bridge High School.
I did.
You played baseball.
I did.
Who was your coach?
Wiley Lee.
When did you graduate?
2007.
And you were a pitcher.
Yes, sir.
Did you play another position?
I did. I played outfield as well.
Were you any good at the outfield?
I like to think so. Once again, that depends on who you ask. You know?
If I call up Wiley Lee, what's he going to say?
He's going to say to you that I was good.
Okay. Well, he's a good coach.
Story to me. Yeah.
Well, all coaches, they tend to be. Anyway, and you enjoyed your experience there.
Oh, I loved it.
Okay.
I loved it.
Well, Great Bridge has a history of great baseball. Yeah.
Very good baseball school.
And how often did you get to see Henry Kadai or Michael?
Every once in a while,
right.
You know, Michael at that time, especially at that time, was a very busy man.
Yes, he was. Now, he and the Uptons were products. Well, wait a minute. Justin was a product of Great Bridge. BJ was a product of Greenbrier Christian. Right?
Greenbrier Christian.
Right.
Yep.
Okay. Did you ever get recruited by any of the private schools?
No, not the private schools.
Oh, okay.
No.
Did they smile when you showed up the first day at Great Bridge for a baseball tryout? Now, what, you're 6'3", you 6'2", and a half, 6'3"?
I'm 6'5".
You're 6'5".
Yeah.
Oh, geez, I've lost my eye for that. Well, how tall were you as a sophomore in high school?
As a sophomore, I was probably 6'2", 6'3".
So you were good size. So
sure, yeah, of course.
And coming from the right side.
Right.
Excuse us, folks. I mean, we're talking baseball. It's not that often I get to. My son played baseball in Great Bridge.
I could do this all day.
Yeah, it's a lot of. This is the Real Estate PB&J Hour on Money Talk 1310 AM 100.9 FM. But we kind of digressed and went off into baseball because it's one of the loves of my life. All right. We've defined a condominium. We've defined a cooperative. We've defined a single family. We've talked about some of the things you review, specifically appraisals. But you kept touching on insurance.
Yes.
All right. Now, usually my understanding is a condominium development, we're going to call this a development, has a master policy that the fees for which are paid by all the homeowners in that condominium development. Is that correct?
That's one of the main things that the associations collect your assessments / HOA dues for.
All right.
Is the insurance premium.
And that insurance, that covers the exteriors of the properties?
It does.
Okay. Now, what do they have to provide to you when you are reviewing the package? I'm talking about the buyer now. I'm a buyer of a condo. What has to come across your desk on my behalf and my insurance that you look for? So
as far as the homeowner's insurance, we really just want to make sure that you're sufficiently covered. So between the master policy and your insurance, we want to make sure that if something were to happen to your unit, that you can build it back the exact same way it was before that happened. Okay, now I heard you on another presentation where you talked about betterment insurance. Betterments. Well, let me ask. I'm going to phrase the question. Sure. My unit burned down. Okay. But I just put $35,000 kitchen in there. Do I get that kitchen rebuilt at that price under my standard policy without betterment insurance? Yes. So
good.
when
Okay.
betterments and improvements insurance comes in, that's the main reason why we make the borrowers get an HO6 policy with building coverage.
Okay.
Because we all know that the master policy for the association covers the exterior.
Okay.
And I will say most of the time that policy comes with interior coverage as well. However, that interior coverage from the master policy will only cover it back to builder specs.
Okay.
So
So my $35,000 kitchen has gone up in smoke.
That's not covered under the master policy.
But on my
Most of the
personal
time.
policy,
On your personal policy, yes.
do I have to? Now, I bought this personal policy. I pay for it every month. I've been in the unit for 7 years now, and I just completed the renovation.
Yes.
So do I have to tell them that I have this increased value?
No.
And I don't have to tell them.
You do not, because
I'm not talking about the master policy. I'm
Right.
talking about personal.
Your dwelling coverage on that HO6/condo policy
Right.
will cover that. Either if the upgrades were done before you bought the unit,
Okay.
or after,
Okay.
that amount is good for those upgrades.
So I don't have to go out and buy a betterment policy.
No,
But
sir.
that language is important, though, when I'm
is.
placing the order with my agent. Is that correct?
So
That's in
you
HO6.
want to, yes, you're, on the lender side, I know what I'm looking at, but
Right.
of course you want to make sure with your agent, you want to ask about every single coverage
Right.
and what it covers.
Is there anywhere we can find something that we can use as a tickler or a flyer that would explain this to me and to my clients better than trying to do it in 5 minutes on the radio?
Besides Google?
But can we trust Google? Yeah. Good. What we'd look for? HO6 or betterment policies for condominiums?
Yes, it's always called an HO6 with the condo policy. Now, once you get into single families, there's the other policies that kick in, the HO3s, the HO9s, stuff like that.
Okay. Now, I got a VA buyer.
Sure.
Okay, he's going to buy a condo in Virginia Beach, lovely little neighborhood. But one of the reasons that my buyer wants to be, his tour here is only going to be 18 months. No, it's going to be actually 2 years. He's going to be here for 2 years, and then he knows he's going to be transferred. But he wants to be able to, in all probability, keep it and rent it.
Sure.
Okay. Now, what percentage of other units in this neighborhood, in this condominium development, can be rented and allow the condominium development to be eligible under a VA loan? Isn't there a percentage? Is that one of the things you look at?
It is, and that always depends on the program that you're doing.
Okay.
And what occupancy that loan's going to be under.
Okay.
So VA, they really do not worry about that as much as FHA does.
Okay. Now let's go to, now it's an FHA. Okay, 3.5% down. Okay.
So FHA, that threshold is 50%.
So no more than 50% of the units can be rented.
That's correct.
They have to be owner occupied.
Or second homes. In the condo world, we can bunch those primary and those second homes together.
Oh, okay. That's I
Only
didn't
when
know
it's
that.
a full-time rental investment property.
Okay.
And then to switch again, going to conventional, the only time we care about that ratio is if it's an investment property. If the loan we're doing is for a buyer that is buying that to solely rent it out full-time,
Right.
that's when we look at it.
Okay.
But there's also ways around that too.
Well, you want to advise us to one, or should we talk to the loan officer?
If you put
Is the
enough,
loan officer going to know?
if you put enough money down conventionally to where we can do a limited review, if you've heard of a limited review,
Is that 30%?
that's 25 for second home and investments, 10% for primary.
Okay. So it's not a 30%. But my understanding is today most lenders aren't lending investment properties at a LTV, loan to value ratio of greater than 70%. Is that? You're seeing.
That's not Towne Bank Mortgage.
Okay. Folks, you heard it from here. First time. Towne Bank Mortgage. They're good people. I know that. I don't have my loan with them, but their loan officer was with Towne Bank, my loan officer. Okay. Kim, we've now had Taylor on the grid for a little while.
All right.
And I know you have a couple questions for him. So what you can do, Taylor, you can step over this mic when she asks the question. Okay, yeah.
All right. Well, I was, he said something about the property managers earlier. Are you talking about the big association managers that are over those condo units? Is that kind of what we're referring to?
Yeah. For the smaller associations, I would say for your 12 to 20 unit associations, a lot of times they won't pay a management company or a property manager to take care of that stuff for them. They'll usually have like an HOA president take care of that stuff, or the secretary, or what have you. That's when the larger condo associations, they will pay a management company to handle all that stuff for them, handle all the requests from the lenders. They'll keep a database of all the docs that come in, stuff like that. Now,
so how do you feel about, because I had a very difficult transaction, and actually Holly Robinson from Towne Bank was on our Advanced Financial was on the opposite side. I had a 6-unit condo in Virginia Beach, and they didn't have professional management. They had it before, and they got together and decided they didn't want it anymore.
Sure.
So they decided that they were going to do it themselves. Well, it was difficult. I don't think they really understood that it's kind of like a mini government. So a lot of issues came up. They didn't really have how to give all the documents required. So when you have a situation like that, what is the minimum you need from these small associations of 4 or more that have to have some type of management and docs given? What exactly minimum do you need?
We would love for them to do their due diligence once they, take on that responsibility to know what's going on with the project. And I know my other lenders and people in the collateral world listening to this would agree with me. Just please help us out.
Right.
We'll be happy to explain it and get out of your hair. If you don't want us to bother you, we just work with us.
And so the one thing about this one is we had a couple units that were behind on their dues for a while. So is there a percentage in your world of condo associations that they had only a percentage of them can be behind on their monthly dues?
Yes, and that is 15%.
Wow.
And it's for unit owners that are 60 days or more delinquent on their dues.
60 days or more. All right. So and another thing on this is, do you give more value to condominiums that are better managed?
No. They're really just supposed to be well-maintained projects. Well, we call them projects, associations. Mm-hmm. I'm sorry. And that's what, that's really why Fannie Mae and the big agencies have us in place to make sure that these borrowers are moving into a financially stable and structurally sound association.
Right. All right,
okay.
Thank you.
I want to thank 2 people. I want to thank Kim Pimento for stepping in for Joyce. I'm Paul Fuqua with Rose and Womble, and this is the Real Estate PB&J Hour. And I especially want to thank our special guest, the bad guy in the back room, the underwriter, the collateral underwriter for residential loans, Taylor Reeves. It's been a great pleasure. This is our 18th show. We're going to be finishing up, I think, our second 13-week segment sometime in July, so you can continue tuning in on Thursdays at Money Talk 1310 AM, 100.9 FM, and moneytalk1310.com. Do you have any last-minute things you'd like to say, Kim?
No,
I bid everybody adieu?
Yeah, no, I appreciate you letting me be here. It's fun, and I appreciate Taylor for coming out. He had a lot of good information.
Did we put you on the spot at all, Taylor?
I was ready for that.
Okay,
Paul.
How about baseball?
I could talk baseball all day.
All right, well, we'll do that over a beer sometime in the near future. Dino, are you giving me the high sign? Are we signing off tonight?
We
We actually have 1 minute. 1 minute where we could talk a little baseball.
Oh, okay.
okay, well-
Yeah, step right up there. What was your greatest thrill as a baseball player in high school? I know you played college ball, but in high school, what was your biggest thrill?
Oh, I would have to say that regional tournament at ODU every year. That was definitely playing in front of a couple thousand people as a high schooler. That's
Right.
definitely something to look forward to.
Did you find the pressure at a college level was as significant as it was at Great Bridge for you to perform?
Oh, it's definitely, because when you get into the college atmosphere, everybody was a 3 and a 4 hole hitter,
Right.
in high school.
Yeah, my son played ball. And I will never forget. We went down to East Carolina for the opening season. There was an opening tournament. He goes up. They were rotating him through. He had been a situational reliever, and his first pitch as a college pitcher cleared the fence. He then struck the next 3 guys out. So that's why they made him a reliever for the rest of the season.
My first pitch in my college career was a double off the wall.
His was over the wall. Thank you again. This is the Paul Fuqua Real Estate PB&J Hour, and we look forward to talking to you next Thursday at this same time, same station. Bye-bye.